An invisible high-tech dragnet is sweeping across the state of Florida right now. This automated system is quietly stripping everyday citizens of their homeownership status. For generations, buying a home here symbolized ultimate middle-class success. You assumed your asset was secure if you paid your taxes. But the rules changed completely in 2026. Major insurance syndicates dropped traditional field teams for artificial intelligence tools. High-altitude satellites are scanning your private property from miles above the earth. Your family home is no longer a secure sanctuary for retirement. It is just a data point for an algorithm programmed to cancel you. And this is where things get ugly. Imagine opening your mailbox on a standard Thursday evening after work. You find a cold notification from your provider of 15 years. The letter states your protection will be permanently canceled within 30 days. You call the hotline in a panic to reach a human representative. But the local staff knows absolutely nothing about your property file. A human inspector never even stepped foot on your green grass. The cancellation was triggered by an autonomous satellite filter checking your neighborhood. The software detected a cluster of aging branches hanging over your roof. Data shows over 35% of non-renewals come from these sweeps. Mainstream business channels love to praise this technology for reducing industry waste. But the ground reality is a terrifying tech purge for ordinary families. Would you keep investing your income into an unverified computer scan? New master plan developments feature clear grid layouts that easily escape these filters. But traditional suburban infrastructure faces an immediate countdown to financial distress. Many independent consumers believe locking their security fences protects their residential privacy. But property lines mean nothing to high-altitude data syndications today. The software models analyze your entire lifestyle perimeter from the sky. The computer flags a routine stack of firewood near your garage door. It tags a temporary plastic tarp or slightly discolored summer grass. The system automatically categorizes these everyday items as extreme fire hazards. Once that negative risk label hits your file, retail rates disappear. Politicians claim these digital tools introduce modern accuracy into the underwriting process. But the real-world consequence is a complete loss of independent consumer control. There is no human path to appeal the automated decision anymore. Do you think a software algorithm should hold power to blacklist your home? Naturally, large insurers must protect their treasury solvency from massive storm surges. But this rigid reliance on algorithms shifts the entire risk onto you. When these computer models blacklist an entire community, the local market paralyzes. It is no longer an individual issue for one house on the block. Entire zip codes are moving into an institutional credit freeze right now. When private carriers withdraw, no traditional buyer can get a home loan. Commercial banks refuse to clear mortgages without active private hazard protection. Glossy lifestyle magazines continue to celebrate local real estate as a wealth generator. But on the ground, hardworking professionals are trapped inside unsellable properties. Would you risk your life savings to buy in a blacklisted territory? To be fair, global mega landlords love these severe transactional freezes. It lowers land acquisition costs for cash buyers who do not need mortgages. But for a regular middle-class family, this housing blockade is an absolute catastrophe. Desperate homeowners locked out of the private market turn to public options. They apply for the state backup pool, expecting stable, consumer-first safety. But this state-mandated safety net is suffocating under an avalanche of forced applications. As thousands of satellite-dropped consumers flood the pool, the ledger hits a wall. Administrators are forcing historic premium increases onto policyholders to prevent insolvency. Families open their public statements to find annual insurance bills have quadrupled. The overhead now matches the cost of their actual annual property taxes. Headlines market this program as a vital shield against volatile private markets. But the practical reality is a financial mirage with highly restrictive coverage. How long could your checking account survive an $8,000 cash infusion? Wealthy individuals with global passive income can absorb these spikes without issue. But for an independent teacher or nurse, this trap triggers immediate distress. To protect their cash flow, some consumers attempt to drop hazard coverage completely. They assume going bare is a viable short-term strategy to buy food. But if your home carries a bank loan, lenders will never allow it. Compliance departments use automated data links to monitor your status every day. The moment your policy lapses, the bank triggers force-placed insurance automatically. The institution buys an expensive contract from their own internal affiliates. They add that massive premium bill directly to your monthly mortgage statement. These forced policies cost up to 4 times more than standard protection. Worse yet, they provide zero personal liability coverage for your family assets. If your budget fails to cover this inflated amount, foreclosure activates immediately. Influencers always marketed a 30-year mortgage as a foundation for retirement security. But inside a market ruled by algorithms, that contract is a legal cage. What path do you have when a banking program doubles your debt? Affluent cash buyers stand completely outside this institutional foreclosure cycle, of course. But for the working class, this constant automated intimidation drives a historic migration. Take a deep breath, because panicking will never protect your housing equity. Understanding the actual mechanics of the system will give your power back. The landscape is changing fast, but you do not have to be the victim. Every major real estate shock eventually forces new consumer protection laws. But you should not sit around waiting for politicians to save your asset. If you carry a mortgage, do not let your coverage lapse for 24 hours. Proactively shop for public backup options before your private carrier drops you. Avoiding the brutal force-placed insurance penalty from your lender is priority number 1. Second, beat the automated algorithms at their own game with immediate property hardening. Clear the dry brush and trim hanging tree branches back by 10 feet. Upgrade your roof structure with fire-resistant materials to lower your hazard score. Document every single upgrade with clear video evidence to challenge the satellite scans. Third, if your home is fully paid off, look at the math closely. Stop funding an overpriced mirage with an insane $100,000 deductible. Many smart owners are building their own high-yield liquid emergency reserves instead. You are not completely helpless against this algorithmic financial squeeze. The American dream is not dead. It just requires a smarter strategy. By taking proactive action today, you can protect your family wealth. Share your specific zip code and your current premium numbers down below. Let us map out this landscape together as an independent consumer community. Stay grounded, execute the practical mitigation steps, and subscribe to stay informed. I will see you in the next report.